Hey guys, per usual, everything on this channel is for educational purposes only, and it's not intended as financial advice. So it's been a few days, been traveling sick, but I'm here, I'm back, I'm with you now at this crucial time, Bitcoin's price discovery mode, all-time high mode. So yesterday I asked the crypto Twitter what they thought of all-time high situation. Somebody else was saying that August, we've had 50% of the days being all-time highs. Pretty interesting. So 866 of you voted. Most people think it's going to happen after SegWit. Generally, most people are wrong, so it's probably going to be either today or February, or this was the top forever, which I don't think is the case. Really no evidence for that. Second, I'm an advisor to Experty, which is a upcoming ICO. This isn't telling you to buy the ICO. Check out the project. Love it, hate it, let me know. What it is decentralized Skype-like calls that are paid, and we use Ethereum smart contracts for that, settled in real time. Follow me on Twitter, guys. I'm running the Twitter account, and it's kind of like pissing in the wind here, because I'm shooting off some real good ones, but no one's there to catch the ball on the other end, you know? So at the very least, give me a follow on Twitter. Alright, let's get to the charts. I'm going to start on the weekly as per usual. In general, you should always start your analysis on the highest time frame and work your way down. So, you sit down, you see this, what do? Well, immediately the first thing I would want to do is fib stuff out. And I will fib this out separately on a lower time frame, but when we have an interim top, you can always fib it from that top, okay, to any one of these bottoms, any one of them. You can see if we go to this extreme low here, it's calling for 4663, 4666 would be interesting. You always have to keep in mind of these psychological numbers in all cultures, considering Bitcoin is global. So 666, 444, 888, those are some Chinese relevancy there. So that's the first thing. Fib it out, great. Candles look amazing. You can call this 3 white soldiers if you want. The weekly hasn't closed yet. When you see that, like here, green, 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 3 solid candles with large body, momentum, you can reasonably conclude that there is going to be heavy follow through in the weeks to come, or in the time frame. A lot of people talking about a bear div on high time frame charts on the weekly. So here's my take on it. Yes, we are building a bear div should it occur. However, until a pullback occurs in the candles, you cannot call anything a bear div. And a lot of people in general are overusing a bear div. This is an appropriate place to call something a bear div or a bear div is building because it isn't ranging, okay? It's not consolidating, there's no triangle here. We're going up, there's clearly higher highs compared to here, and RSI will most likely be lower unless, it's one of these situations, okay? I was talking about a shark fin in one of my videos, but unless we breach 90 on RSI on the weekly, you're going to get a bear div. But until that occurs, or doesn't occur, you cannot call it a bear div. For instance, let's take a look at one of these candles where there was a pullback. So if you zoom in on this here, this was technically, you can always zoom in on this too. Okay, here's a new high here, and this candle is where the top was in. Look where the RSI was, all the way down here. Until we get a down candle on the week, you can't call it a bear div. So calling anything a bear div as we're moving up is silly. It doesn't mean anything. Because obviously it's just going to keep building, canceling itself, or trying to cancel the bigger div. If we go to Heikin-Ashi on the weekly, again, similar to the 3 white soldiers is what it's called. Same situation. Momentum is huge here, huge. Similar to here, all these run-ups, very big momentum coming off of the Bcash split. Praise Satoshi for allowing them to go play in their own sandbox. As far as Pitchfork is concerned, you really need to pitchfork it on a lower time frame now, because if you do one of these, you can see we're pretty much out of everything. Going to candles almost looks okay, honestly, on the index, depending on where you put it, but you want to capture, this is clearly the low to me, and you can curve fit this all you want, but that's clearly the low. This used to be one of the anchor points. You can see we were just floating above the top there. There was a point when I was using this as well as an anchor point. You can see we're even above that, and it's pretty valid because it shows this all as being the bottom, which it was. We turn on the cloud, doubled weekly. I was saying in the Brave New Coin article, check it out if you haven't read it. I'll link it below in the description, but as long as cloud is thin, that's what you want to see. This is exactly what you want to see. It'd be great if price is a little closer to the cloud, but that's fine for right now. What you don't want to see is this situation when you're drawing a United States cloud, the map of the United States. Which it kind of looks like, here's Texas, Florida's floated off in the ocean. But when you start to do this, then you start to risk this massive edge-to-edge situation which occurred here. What is this telling you? It tells you were ranging for a long time here. Basically ranged for a year in this zone until we broke out of it. So it's not likely that we're gonna, get this huge blow off top and then Eiffel Tower back down if it's the top. I think the automatic sell-off, automatic rally situation. So, when we get one of these automatic rally, automatic sell-off, or automatic rally, automatic sell-off, and it just keeps going and going, that can keep going forever. But when we start making distribution at the top, that's when it'll be a concern. This was accumulation. You can see we got the wicks. So we'll have wicks a couple times, likely, and just sideways. Might be a year, might be 6 months, might be 3 years, whatever, but that'll be distribution. So your best bet with spot is to just hold it and forget about it, honestly. You'll have plenty of time to get out. You'll have likely multiple chances to get out. Okay, similar to here. You had multiple chances to buy this low. If you mirror this, flip it around, stick it up here somewhere, 5K, 10K, I don't know. That's what it's going to look like. So don't flip out. It doesn't help you if you're trading margin intraday, obviously. Now let's go to the daily cloud. We are pretty far from the Kijun, which is concerning. Kijun is sort of the equilibrium, like the pitchfork median line. Price will continually want to reach for it. Look at ETH. Look at any of these alts that have had these insane runs from March till now. They all touched the 200 or the Kijun at some point. We touched here, we touched here. So we're not necessarily due for a touch soon based on the 200, but on the Kijun, we're going to touch this. I don't know when, not to be all doom and gloom. We are going to touch that in a wick form like this, automatic rally, automatic sell-off, whatever. Whatever it's going to be, it's going to happen. The Kijun might be up here by the time that happens, I don't know. The point is to watch for it now, be proactionary, if that's a word. Be proactive instead of reactionary when it's happening. Again, that doesn't help you for intraday. And there's no div building or active at this point. We're several days or weeks out from being any definitive div situation. And just like I was saying on the weekly, we built a div on the daily for a month before anything really happened. And then we consolidated for this range. There were also divs building here, so in hindsight this was more of a channel than anything, any divs necessarily. When it starts to range like this and there's no definitive high or low, it's not considered a div, it's just consolidating and ranging. This is definitely a div. This is definitely a div if you look at the RSI and the price. Alright, so now let's move to Heikin-Ashi. So I don't think enough people talk about stops in general. Again, if you're buy and hold, don't listen to this, but if you're trading any intraday, anytime you're getting a long wick or a small, a momentumless Heikin-Ashi candle, that's where you place your stops, okay? So stop would be here. You can see we didn't hit it yet. This is your next stop up, 38.23. You can look at that on a lower time frame as well, but if you're trading off margin, you can afford to let it go a little while before it gets down there. If we move to the 4 hour, you can see the same thing. Large wick. Again, depends on where you got in. You'll also see the Kijun on the 4 hours here. That's suspicious. So whether or not you want your stop, a little bit lower or even in this range here, play around with it depending on what you want to do. Alright, so 4 hour cloud. We had a nice Kijun bounce roughly. Again, this is a fuzz zone anywhere around this equilibrium line. So it doesn't always hit exactly, but sometimes it does. Sometimes it overshoots. If we look, over here, it overshoots, it bounces. There are times when it blows right through it. But in general, bids on the Kijun are around, plus or minus $30, $40. Great, great, great. So 4 hours is generally my favorite time frame. Not much here on the cloud. It is pretty crazy. We were at 1800 exactly a month ago. So that is a 137% in a month. That's pretty good, right? So again, cloud's really good at entries and exits, not very good at targets. So let's check the fibs. Again, I do the same thing every time. It doesn't change ever. Fibs for targets, pitchfork for targets, chart patterns for targets. The 1618 at 6K for this run. Will be interesting to see whether or not that happens. Certainly a possibility. So, okay, 6K 43, just mark it on your chart. That way you can take this off, you can forget about it. That line's there. I like to mark these red. I feel like Bob Ross, a little happy horizontal line. And then we'll fib this out as well. So in general, it feels to me like Bitcoin's moving much faster than the 4 hour can keep up with it. You can see there aren't many patterns here or consolidation type stuff. Back here there was. There was inverted head and shoulders. There was a triangle that broke down. For the most part now, I don't really see anything on this time frame. There was a questionable head and shoulders here, shoulder, head, shoulder, but volume for that isn't descending. Doesn't really make sense. So if we move to pitchfork, you gotta kind of figure it out. This pitchfork, does this make sense? Is this valid? No, it's not. Why? Because most of this isn't in the pitchfork, okay? It's drawn correctly. It has anchors that are correct. Extreme low, relative low, relative low, relative high. Not correct. So what you want to do, zoom out, find the next bottom, maybe this one, maybe not FinX, but that one, and let's go here. And all of a sudden, that starts to fall into line. It makes sense. Again, the pitchfork, or any horizontal or diagonal, is a line in the sand. It means something until it doesn't mean something, or it doesn't mean something until it does. You can see here, this one, looks valid to me. It's got some bounces. It's trying to return to the median line a few times. It's consolidating on the median line. The next target up is up here. So if you want, you can draw a ray and then just leave it on your chart. Oh, you don't need the pitchfork the whole time. Boom. Okay. Let's just check out the 5200. Again, that told you to get in way back here, so you're good for that. So here's the hourly, and this is where I start to look for patterns, because what I want to see when I go down the time frames and I see a trend, I know all the high time frames are bullish. What I want to see is price dipping in the cloud and supporting, dipping and supporting. We've seen this fractal before on other time frames. W, inverted head and shoulders, whatever you want to call it. But you can see when it dips in and bounces back out, there's a high probability of continuation. That says support is support, not rock. So if we look at patterns, like I was saying, I was drawing a low time frame inverted head and shoulders. We'll look at that in a second, but that got blown out. Okay, the target's still there. We hit the target, but pattern itself, you would have got stopped out if you were trading it. I'll tell you why, but there's a nice W here, and for any pattern, what you can do one of these, okay, turn on the volume. Is it descending? Does it break out? Yes, okay, it's real, it's the real deal. This is obviously late hindsight, if you want to call it that, because it already happened. So some ways you can draw this out, same thing with anything, you go from the resistance to either the extreme low or anything you want that you think is worth. Sometimes I do this, so you can go here, copy this, paste this up. Okay, so that's one target. And the second target would be here, and that gives you a range. And usually it's just returning to the not all-time high, but the local high. So this would be the range, somewhere in here. And you can see we're sort of building a flag of some sort here. So that's not unreasonable. Another thing I like to do is fib from high to low. It gives you another range, more confluence for this target all the way up here, 4400. Right now I have some spot stuff that I'm playing with that was bought in here that I'm selling near local highs, which might be crazy some people, but I'm just playing one or two coins on spot, just locking in profits back and forth. So an alternative roadmap to the 4400 retest would be this harmonic. I don't know what it is, a bat probably. The point is, I really only look at this number every time. This number's kind of relevant, but as long as this is close to 886, that's all I care about. So you can draw this once you have 3 points and move it to 886, and then once it happens, then you can say it's valid. So the target for this would be down to the 50%, 4100 basically, essentially a retrace completely of this candle. Feasible. The other support would be this AC diag, okay? So keep that in mind. Your entry could be anywhere up here, really. Once we break all-time highs, we're going to get a lot of stops that are cleared out, because generally, if you're short or long, you want your stop to be just above the local high or local low. And then also, if you're waiting for the breakout of all-time high, this would be the next target up, 4800. All right, last chart. Let's just take a look at the head and shoulders that broke down here. So generally, when you get the pattern, you draw it out like that tweet, okay? We got the pullback. So we got the pullback after the throwback pullback, okay? Once it breaks the neckline, you can move your stop just below the throwback. Once it hits the throwback and it happens, you can move your stop just below that point, okay? So you're either stopped out here, or you leave your stop at the right shoulder, and you would have been stopped out here. The other problem with this is it never broke volume this whole time, the trend. So the other thing that happened, I'm not defending the pattern here. It was a failed pattern. The setup's perfect, structure's perfect, volume's perfect, throwback, everything beautiful. But you would have got stopped out if you were playing it correctly. If I was playing this on leverage in some way, this pattern, that's the other problem. It was on a 15-minute or a 30-minute, depending on where you looked at it. So that inherently means it's less likely to, not maybe less likely, it gets trickier. The signals are a little noisier on lower time frames. Yes, Bitcoin's moving quick enough that you can look at it on the 15, but in general, low time frames are risky. So you can see it's just ranging in this order block, basically. And once it broke on volume, that was the deciding factor. Now you're either in or out at that point. You know, maybe you're in just holding and you're underwater this whole time, because you should never enter until breaking the neckline. So this is a perfect fake out. So keep this in mind next time you're trading head and shoulders. There was breakout. It was not on volume. That's very important. Again, I'm not defending anything. The pattern's there. It's perfect. It's on a low time frame. There was, you know, another like shoulder, head, shoulder situation. A little messier, but that worked out. This felt like a news pump to me. I'm not really sure on what. There's some like ETF thing going on again with another ETF and probably another ETF that I heard as well. Overall, nothing super huge in my opinion. This does look like a falling wedge now on low time frames, which is a bullish reversal eventually. You can see again we're getting immediate volume consolidation here during the pullback and profit taking. So based on what I'm seeing right now, it should break up, but again, you're on the 15-minute. Any pattern here is questionable. All right, hit me up on Twitter, Telegram. Let me know what you think of the video in the comments below. Like, share, dislike, subscribe. We hit 4K subscribers. Thank you from the bottom of my heart. Follow me on experty.io. Follow me at experty_io on Twitter for some laughs, goofs, and gaffs. And happy trading.